They're talking about uranium, copper, gold, and if you take a look at the stock reaction.
Hong Kong markets also hit record highs early in the session.
Hello again. Yes, TomTom shares are higher by approximately 7.5% in trade, as you can see on this very pretty chart. It's a bit curious, isn't it? When a company comes out, you usually reward it when it gives a very, very concrete comment on outlook, and in terms of a positive outlook, that's what you would anticipate with TomTom. But that hasn't been the case this morning with TomTom. They beat forecast in the second quarter, but they didn't give us any outlook because they indicated that they need a little bit more time to see what type of visibility we're dealing with towards the latter part of the year. They see cost savings of 90 million euros, up from 60 million euros. And the CEO, I mean, we spoke to him earlier, and I mean, I'd say he remains relatively optimistic in terms of some of the strengths in their various important markets. They had this huge purchase of TeleAtlas around a year ago that left them with a very large debt pile, but they are being rewarded this morning on the back of these results. They still expect the total North American market for personal navigation devices to be 17 million units in 2009, and the European market for the same to be 15 million units.
Nouriel Roubini this week claimed that as far as the economic recession is concerned, the worst is behind us. I'm not sure if John Caslione will agree. He is the CEO of GCS Business Capital and author of Chaotix. Good to see you, John.
Good morning, John.
Would you beg to differ with Nouriel Roubini?
Actually, I would agree with him that the worst of it is behind us. But what I also want to do is put in perspective in that the boom and bust cycle that we've known, which has basically been about 7 or 8 cycles, one was a double dip over the last 50 years, where we see the sine wave of the economic cycle, we believe that that cycle is over. That what we're going to start to see now going forward, because of a lot of the factors that are taking place in a very globalized economy now, is the fact that we're going to move from a sine wave to a more of a series of non-uniform W's, more like an ECG, a heart wave, if you will. And if you start to look at it, we really have already entered into this, what we call the age of turbulence already. Much of the discussion that I listen to is trying to benchmark back to almost setting, resetting or pushing the reset button to the old economic cycles as we've known it in the old economy. A lot of the words that we used when we wrote the book more than 9 months ago, the new normality, we hear about the new normal now, we hear about early warning systems, we wrote about all of that. What we're saying is that we now really have to start to look at maybe redefining what is a recession. Recession, by definition, is 2 consecutive quarters of negative GDP growth. What we may have is we may have 4, 5, 6, 15 months of prosperity. Then we may be followed by some months of downturn, what we call the new normality, spurts of prosperity and intermittent spurts of downturn. Yeah. And when we do have a downturn, it's not as though we're going to be looking into the abyss that we've had before. But I think that you mentioned the book Chaotix. Chaotix will have actually 2 launches. Right now we're in more than 50 countries and more than 24 languages. The second launch will really be when people start to say, well, wait a minute, we've just had X number of months of an upturn, and now we're going down. And where is the cycle again? Because we've been accustomed to 5 or 7 years on average of an upcycle, and we're not seeing that.
The most dangerous word or phrase in economics is it's different this time, isn't it, John? Well, and that's the problem, isn't it? It's always compelling to put out a new theory that suggests that things have changed permanently. But you cannot change the nature of the human condition. And we are people that swing. We have very large swings in emotional behavior from the deepest depression through to the euphoria that comes with knowing that even the taxi driver is giving you stock tips on the way to work. And we will go back to that, won't we? We are going to come through this. There is a good part of the world that still needs new technology, still needs the latest foods, still needs new supermarkets, and so on and so forth.
I think that is not going to change in terms of people's emotions, people's feeling, sort of strategy du jour, what we're feeling of the day. I think what we face now, and why this is different, is that you start to look at globalization, where we've evolved to now. You start to look at the rise of the rest. Okay? You look at the fact that 8 of the 10 top sovereign wealth funds are from autocracies. You start to look at a lot of the investments that are being made. You look at Business Week magazine's cover story this week, China goes shopping. No more treasuries, now they're looking at buying assets. You're looking at the number of crises that we have in the world, when we, you know, healthcare, food, environmental. This is all very, very different than we've ever had in the past. And what's happened now is that we now have what we call an interlocking fragility with the evolution of globalization right now that we've never had in the past.
Who do you think has the power?
What I'm hoping for, quite frankly, is the power is going to come back to the presidents, the managing directors, the top business leaders of their companies. I think one of the problems that we're facing is sort of systemic in a way. We've been pushing for short-term profitability and too short-term of growth.
So back to true capitalism, or back to true capitalism as we know it.
As we know it, as we believe we've known it in the past. So right now what we have is a situation where we are all, I think many of us, are hoping that we can go back to what is substantially the old way, because that's our benchmark. That's our reality. That's been our reality for so long. But it's inescapable with the factors that are taking place, the turbulence that is going to continue, and it's going to be more heightened turbulence. The way that static unemployment, at least in my country, 4% has always been the norm. Now we're hovering a little under 10%, and they're saying we're going to probably break 10% and continue to maybe 9% to the end of 2009. In the new normality, we may have to readjust what is static unemployment. It may be not 4%, it may be 6%, maybe 8%. It is going to be higher because the collapsing of the economic cycles that are taking place. The other thing that's really interesting is we've been in contact with many presidents, CEOs, managing directors of FT 100 and Fortune 500 companies. It is remarkable how few are engaging in scenario planning with all that we've been through, and how few are engaging in self-imposed stress tests. One of the things that we believe is that the same way that the Treasury Department has put the U.S. banks under stress tests, that our companies have to be able to create scenarios for sometimes the unthinkable, because we've entered into an age where the unthinkable has become reality. And self-imposed stress tests should, in my opinion, be demanded by boards of directors more and more, because the economic cycles are going to be collapsing.
John, we've got to wrap up with you, but thanks very much for coming in, telling us about your view on where we go from here. John Caslione, the CEO of GCS Business Capital and author, of course, of Chaotix. Becky, let's come back out to you and just get an update on the earnings.
Yes, we're waiting for some more earnings to kick off the new day here in Europe, particularly from Fiat, which comes out with their figures a bit later on. Today, the shares of Fiat looking pretty flat in anticipation of those figures. Second quarter net loss seen at 110 million euros. Lots of focus too on the debt, on the integration of Chrysler, and possible further acquisitions as well. Let's get straight out to Claudia Pensotti in Milan for a bit more on this story. Claudia.
Yes, Rebecca, well, we are expecting those numbers out in a few hours, and 110 million is the consensus in terms of loss that's expected for Q2 for Fiat. That seems pretty much a number that everyone is accepting. You have mixed picture. Some are really actually looking at a